Yes, hello family, hello family, hello smart money traders. This is Rambo KE, and I want to talk particularly about the smart money concept, particularly about the order blocks. All right, this is a very significant concept. All right, it's one of the most important concepts in the smart money concept. All right, this concept is going to allow or give someone an edge in the market. Maybe someone somewhere is gonna develop a strategy or is going to understand the idea behind an order block. Alright, we hear people saying order blocks here and there, but maybe some people are being confused and they really find difficult determining the valid order blocks. Alright, so today's topic is about order blocks and I want to dive into it in a precise way. Alright, so what's an order block? Alright, for starters, order block is just a compound word, right? It's two different words, but they are put together to form one word as order and a block. Block in the financial markets, it means a large transaction. Alright, it means a large transaction, and these large transactions are usually done by the smart money guys, all these big institutions, right? And those smart money guys or those big institutions, these are the institutions that we tend to follow their footsteps for us to be able to find our edge or to be able to be profitable in the forex market. So once we understand this is going to be a game changer, right? So order block typically this is a price zone, all right, in the market whereby the institutions took their orders, all right. This is a price zone in the market that shows us where the big institutions, all those smart money guys, activated their orders previously, and there is a chance that they will return to it for more order activation. All right. So I don't know if you understand up to that point, right? So we have two different order blocks. We have in a bullish, we have a bullish order block, and in a bearish market, we have a bearish order block. Where do we apply those order blocks? When we are having a clear bullish market, we only intend to identify our bullish order blocks. And when we have a clear downtrend, we want to see as identifying a clear bearish order blocks. Alright. In a bullish market, bullish order blocks are stronger. Alright. Yes, sometimes we may find some bearish order blocks in an uptrend, that's normal, but the bullish order block in a bullish market, they are the most stronger. Alright, so it is advised to us to always position ourselves into those bullish order block. And inversely, for a bearish market, the bearish order blocks are stronger than the bullish order blocks. So how do I identify my order blocks? Bullish order block is the last bearish or red candle before a strong bullish move that breaks market structure. Alright, so before you come to order blocks, you must understand the basic market structure. Alright, you have to understand how to mark your market structure and how to map them correctly. So an order block is typically the last bearish or red candle before a strong bullish move that breaks market structure. Alright, we'll go to the charts and try to identify a few of them. So if we can see right there, we have this price was moving, decreased, and suddenly we have this impulsive move to the upside. Alright, so price broke structure around this level. Alright, price broke structure around this point and left out this last sell candle as our order block. And this also applies to a bearish market. A bearish order block is the last bullish green or green candle before a strong bearish move that breaks market structure. Note, in both bullish and bearish, we have price breaking market structure. Alright, so that break of market structure is very significant in identifying your valid order block. So price was coming, went up to that point, and then suddenly we see how the impulsive downward movement came with impulsive red candles, and then we take our last green candle, map it from the wick, the body, and the wick. We map everything, we don't leave anything outside. All right, we map everything and we call it as our bearish order block. So in the future we want to see price come to it, tap it, and then it will continue to its original downtrend. All right, so now the question comes, why do often price returns to order block? All right, why do we want to see price returning to an order block, and then we can take our trade? All right, I want to give you a simple analogy or a simple story, all right, or a logic behind how order blocks work. All right, so let's say we are a business person. Let me use myself as an example. I'm a business person, and my business is based that I buy products from the market and I go to sell them in a different market. All right, so in this particular day, I went to the market and my goal was to get 10 tons of my products. It can be whichever product I want to sell. I want to get 10 tons of my product and go to sell it to my personal customers. All right, so I go to the market, and on that particular day, when I have come to my market, I find that I don't have 10 tons available in that market from my supplier. Right? I go to the market, tell my supplier, "Oh, man, I need 10 tons." My customers are waiting. But now, suddenly on that day, my supplier tells me, "Oh no, we don't have 10 tons, but we have 5 tons." Right? I want you to get me correctly. We have 5 tons. As a business person, what will you do in that situation? Can you now return back home and say, "No, I didn't get the 10 tons"? Right? You don't do that. Right? As a business person, you can't do that. You just take the available orders. You take the available orders, deliver them to the market, to your customers, and then later you'll come to the next for the remaining orders, right? So that's basically the same thing. So I'll take the available 5 tons, go supply them to my few customers, and then later, maybe sometime later, the next day, I'll come for the remaining 5 tons, right? And total, I would have gotten my 10 tons. So that's the simplest way I can put it. It's just the same thing. Now the smart money guys, they had their 10 tons previously at this point. Alright, they wanted the 10 tons. So the current price target or price level is not able to deliver the 10 tons. It's only able to have 5 tons. Right? So what will they do? You just apply the available 5 tons, right? And then later on, it will come back for the remaining 5 tons and then it will supply it. Alright, you get my story now? Very perfect. Also the same thing at this point. The smart man came here with 10 tons of orders to sell. Alright, but the available was 5 tons. So they will take their 5 tons, deliver it to a certain level, to certain customers, and then later they will come back, right? You can see them coming back to that order block and to take now the remaining 5 tons plus the first 5 tons they took. Now they have 10 tons, and then they deliver it also to the market. Alright, so that's the story behind an order block, and that's why we always want to see price come back to another block before it continues to its original direction, right? So what are the characteristics of an order block? What will you see for you to conclude this is a valid order block? So if a valid order block forms before a significant upward impulsive move, alright, that's for a bullish order block, and it also applies to a bearish order block. It forms before a significant downward impulsive move. A order block usually it's followed by a break of structure or a market structure shift. Alright. These characteristics are applied both in bullish and bearish order blocks, so no worry about that. Price often returns to these zones before continuing higher or lower, in case we are referring to a bearish order block. And we have seen why price often returns to them before it continues higher or lower. All right, we have identified that, and we don't have a problem with that. And then lastly, our order block acts as a potential demand zone, all right, or a potential supply zone, right? So how can you notice a high probability order block? Now, a high probability order block should have the following. It should be located in premium or discount level, right? You know our BDLA, you know the BDLA, premium and discount. When you are using the Fibonacci tool, 50% is the equilibrium, above 50% is the premium, and below 50% is the discount. Perfect. It should start to a break of structure or a market structure shift in price charts, right? Very nice. It must have an imbalance or a fair value gap attached to it. And then lastly, it should be untapped or unmitigated. Alright? What does that tell us about untapped or unmitigated? Now, when we have an order block that's untapped, that tells us that yes, the smart guys were there previously, they took the 5 turns, but they have not returned to take another remaining 5 turns to complete their orders. Right? That's what it tells us when we have an order block that is unmitigated or untapped. Now, when we have an order block that has been tapped, that tells us that yes, the smart money guys came, took the 5 turns, delivered it to the market, and then later returned to tap it for the second time or the first time, and it took the remaining 5 turns and deliver it to the market. Alright, so when we find our order block being tapped, that tells us that all the orders that were in that order block have been fully delivered in the market. Alright, so there's a low chance of orders remaining there, or a low chance for it to hold price. Alright, sometimes we can see it holding, but the probability of it holding price reduces. Alright, unlike the one that has not been tapped. Alright, and we have seen why that is the case. Alright, so I want to see